Hello and welcome to Stocks Advisor channel. Today we will talk about Eastman Kodak, ticker name Kodak, traded at New York Stock Exchange. So it's a very interesting preset here because we see today it's a white candle after 3 red candles, and it's now at 574 as we speak. And it could seem like we're going to have actually a very nice bounce back and form immediate upwards action, but this is actually wrong. Most probable that we have here so-called knee formation or the false rebounds, which is something like, if you draw it schematically, something like this, meaning that this is a quick rebound and it could be a very strong bootstrap, so you enter into this position and then price actually declines. It's a classical situation. Now we'll discuss the reasons why it's most probably the false rebounds. First of all, the real rebound should take place from real actually resist support levels, not only horizontal but vertical. These could be resist support lines or moving averages, for example, in this case. And as you can see, free moving averages 20, 50 and 200 being green, blue and red lines correspondingly untouched. It's seemingly bouncing from moving average 50 here, but the real support resist will be support in this case, and resist, if it appears further, would be moving average 200, this red line. Still we didn't reach for it, and that would be our target. So here we will target to buy if we go, and actually when we go there. Of other parameters saying that actually we are still continuing decline, it's very important moving average, the divergence convergence, so MACD histogram. You see it's forming the negative wave. It looks like it's going to finish, but actually it's going to continue because the parameters themselves are still high, so they need to go a little bit lower. They are still far from each other, and the top one is still not moving upwards, so its second derivative is still negative, so it's going down. I wouldn't bet on this. And one of the important indicators here, if it's real rebounds over false one, is actually the volume. At this moment you can see it's quite low, meaning that actually there is no real buyout of the position, so that market is still hesitating. And if you look here, that's what you see. So how to trade here? What's most expected behavior? Most expected behavior is of course going down. We still might have a small bounce, little bit here to this line, which will be, if you draw it quickly, in the area of around like 585, something like this. So here, but this is it. After that, we should go down. So this is very strong resist level here, and we should go down until we face real support line. And real support line, this will be very first technical, is moving average 200. So this one. Therefore, this will define our first entering opportunity. In this case, this will be just a moving average 200. Anything lower than it, and next first support level, which is here exactly at 501 and 5. Now we can pull it a little bit higher, taking into account these actions in mid-May and June, so it will be between 501 and 533. This will be the first technical enter, and then we really hope for rebounds, which should go at least till moving average 50 here, the blue line, or in the best case scenario till moving average 20, the green line. But I wouldn't bet on the green one, so I would sell the rebounds here in the vicinity of blue line, so somewhere about 556, let's say, or 557, so in the area of 560s. So this is our first technical entry. What is also possible, the dragging down action could be very strong, similar to what we have seen, for example, in this case in May. Then we should be ready to buy the lower levels. It's classical behavior as well, actually nothing specific or surprising there. And this will define therefore our second entry opportunity, a little bit like this. So this will be actually between 428 and 451. So this is the second technical level. Now if we little bit reduce the scale so we can see what should be the third level, we always call it so-called doomsday scenario. It's not expected technically, but could happen due to some bad catalyst news or whatever coming. Then we should be ready to buy at the levels from where we cannot go any lower. This would be that level between 365 393. Again, it's not that we expect the price to go there, it's just we keep a certain portion of money to buy there if it goes there, because we do non-linear averaging down. This we will discuss at the end of this video. So these are the levels how we buy. Again, a knee-like formation of the false rebounds, bull trap. If you would ask yourself, well, can you show us example of this kind of behavior? Well, there are plenty. Well, we can see, for example, here the false rebounds formation, or we can even make it bigger. Here is a clear classical false rebounds formation. You see it still goes further until it reaches real support line. Here is a false rebounds formation as well. So it's a very classical behavior, but some, let's say, young traders usually fall into this trap. So don't be falling into this trap. We expect lower decline, first to technical levels, and the third to actually support your possible bad news. And with this being said, the way we trade is always non-linear averaging down, meaning the money you'd like to play here, you can split it in 5 portions, then you buy with 1 portion in the first level. If we go to the second level, you can buy with another 2 portions, and then if you go to third level, so-called downside scenario, you buy with the remaining 2 portions. This way you will be actually statistically the most possible safe situation, and if rebounds take place from any level, you will be able not only to cover your losses from previous levels, but also make the profit. And as always, we advise take profit at around 10% from your average price. Don't be too greedy. Do it multiple times. Be technical trader rather than trying to become rich from one trade. So that's all for the moment for Kodak. Good luck with it. If you like what you see, don't forget to subscribe to our channel. Press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.